What does Paris compliance mean for an oil and gas company?
The great steps Shell, BP, Equinor and Total made in Europe is that they now have set targets for scope 3, the emissions of their products, something they didn't want to talk about before shareholders started voting for these kind of resolutions. So that's the big step. But they all promise to be net zero by 2050, but that's not going to bring us to the Paris Climate Accord. We need emission reductions in the next decade. And none of them is promising emission reductions by 2030. They all talk about 2050 without changing their business in the next 10 years enough to decrease emissions. As we all know, the Paris Climate Agreement asks for an emission reduction of around 40%, 40. And none of these companies, despite their great promises, have set these kind of targets and therefore have not invested in a different way as they did in the past.
Is it what investors want, that oil companies start to set very ambitious targets even for 2030, or what do we exactly want?
It's a good question. I think I will agree with Mark. The bar on climate is not static, and many investors really do want to see more ambition on climate from the oil companies. I would say that specifically they want to see deeper cuts to absolute emissions this decade. They want to see wider emissions boundaries, i.e. including all scope 3 emissions worldwide. They also want better disclosure. So all of that is true. They want all companies to be Paris compliant, and that is to aim for a well below 2-degree pathway. I don't necessarily think that they want the companies to be compliant with a 1.5 scenario pathway. So just a slight nuance there. I think more importantly, though, the investors want to see that the companies are transforming themselves. You know, there are two components to the energy transition. One is to cut greenhouse gas emissions, and the other is to increase the supply of low carbon energy. And really, investors want to see both. They want evidence that the oil companies aren't just going into wind down mode, because that is not a great investment proposition, and that the companies have a plan to become genuine actors of the energy transition. So I guess the question is, right now, which one of these two imperatives matters more to investors? From what we see, evidence from share prices suggests that investors put probably a higher weighting on growing in clean energies than on emission reductions.
Adam, you're one of these investors. Would you agree that, I mean, is this what you want? On what side of the spectrum would you put yourself?
Well, I think there's a very clear message from $54 trillion of assets that have unified behind very clear asks of the oil and gas sector that we need to see targets aligned to the Paris Agreement. And that means net zero plans, that means net zero targets, and that means embedding an understanding of what the International Energy Agency 1.5 degree scenario means for an oil and gas company. I disagree that winding down a company isn't a legitimate strategy for an oil and gas company. I think that might be the best placed strategy. To assume that all of them are well placed to diversify into renewables, I think is not necessarily a view held by the whole market. And I think that it's incumbent on the management of companies to discern a path that's appropriate to what they think is best for the company and to bring that to shareholders. And for others, that means working very much through their value chains with their customers. Others, it's going into particular ways and particular technologies. And for some, it may be that they actually best is to run their existing assets and return back to shareholders so that they can reinvest those returns in the renewable businesses that will also flourish alongside the industry. So I think it's a mixture of all of these things. And I think it's important that investors signal that we are willing to acknowledge all of these as potentially part of a strategy of a company, but we then need evidence of the practical application of that strategy, the capital alignment to it, and an unequivocal evidence that their targets match the aspirations that we have. But I'm also very conscious so much of what the oil and gas companies do, we have this enormous focus on them each year, but actually so much of what can be done is dependent on change in demand. We need to shape the demand that ultimately will enable these companies to transition or not. And that means we've got to work through aviation, shipping, road, haulage, etc. That's where we can actually make the fundamental change, and the companies then will have to be responsive to that. Just getting them to make all commitments without any expectation that we reshape demand is just not going to be a strategy that delivers ultimately.